Hello everyone. Hello everyone. Can you hear me? Can you hear me? We are now live. We are now live. Welcome. Welcome to this webinar. Welcome to this webinar. Welcome everyone. I hope you are seeing my screen clearly. Can you please confirm that you can see my screen clearly? My screen, the one I'm sharing. Can you please confirm that you are seeing my screen? Hello everyone. Hello everyone. So far 14 people have joined. 14 people have joined. Can you hear me? Can you hear me? Can you hear my voice? Can you hear my voice? Can you please confirm? All right. Thank you. Welcome to this webinar. All right. Thank you everyone. I can see that everyone is confirming that they can see the screen as well and they can hear my voice. So let's get started. So today's topic, we are going to be talking about the 5 common tax mistakes business owners make and how you can avoid them. So this is the main topic, but first of all, we just want to introduce myself, what I do, what I'm passionate about. So this is me. My name is Wisdom, and I help small business owners and entrepreneurs understand business compliance and digital tools so that they can scale their business. I understand that the landscape of tax compliance is changing in Zimbabwe with now the digitalization of tax collection with Zimra. It is now time for most entrepreneurs to understand and be in touch with the digital world that we are now living in. So that's what I'm passionate about. I've been helping small business owners since 2018. So this is me, this is Wisdom. So now we start our session. So why is tax compliance important? So first of all, it's a legal requirement. For you to have a business that is operating legally in Zimbabwe, you need to be complying to the regulatory authorities or regulations that are set in your jurisdiction, whether it's local council, it's national, Zimra. Then also, when you start a business, you need to protect your business by preventing having penalties. So you protect your business. So it's important that when you comply, you prevent penalties. Then also, as your business grows, you'll be dealing with larger corporations, so you build trust. By being tax compliant or being compliant to the regulations, you build trust with investors, with banks, with customers, with the stakeholders that interact with your business. Then also, you can focus on growth. You don't have to fear that if you grow too quickly, you might be in the spotlight of the regulatory authorities. But if you are tax compliant, or if you are compliant with the regulations, you focus more on growth. You focus more on doing those things that put you on the spotlight, like marketing on the television, radio marketing. You focus more on growth. So that is why it is important to be tax compliant or to be compliant in the early stages of your business. So that's the first step. So what are we going to learn today? Today we are going to learn about the tax obligations. What are the key tax obligations that you are required to fulfill in Zimbabwe as a business owner. So that's the first step that we are going to take. Then we'll move on to the core main topic of our webinar, which is the common mistakes to avoid. So we'll highlight the frequent mistakes made regarding taxes, so ensuring that you avoid pitfalls and penalties. Then also, when you are providing those mistakes, we'll be providing the practical solutions, how you can avoid it or how you can solve it, that can be implemented immediately. So that is our three main topics that we'll be touching on. But our main topic is on 5 common mistakes that that are made in regards to tax compliance and how you can avoid such pitfalls. Then also we'll provide the practical solutions that you can start to apply immediately. Well, are we all together? Are we all together? I believe we are all together. All right. Thank you very much. Thank you. So far we are 19. All right. So we move on. So understanding the business, the basics of business taxes. That's our first topic now. So what are the key tax obligations do we have in Zimbabwe? The first tax obligation that you need to be aware of is income tax. So what is income tax? This is a significant obligation for businesses and is based on profits. They generate. So income tax is based on profits, which is the first key tax obligation that you need to be aware of. Then we have VAT, value added tax, which is a consumption tax levied on goods and services, requiring business to collect on behalf of the government and remit to the government. So it's another key tax obligation that you need to be aware of. Then also we have pay as you earn, which is known as payee. This is a tax that is withheld from employees' wages, which businesses must manage to ensure compliance. So these are the main three. Then we move on. We have also these are the explanations of what is income tax. Why is it important for small business owners? So you must understand the tax rate and how they are filed. They are filed on a quarterly basis, right? Income tax quarterly basis, as QPDs. Most people know them as QPD. It just means quarterly payment dates. So this tax, as we said, is based on profits. So how is it calculated? You will understand later. So also timely compliance. You need to be remitting or adhering to the timelines that are guided by the authorities or by the ZIMRA authority. Then VAT, as we said, is a consumption tax that is levied on goods, on the sale of goods and services. Then also you need to be aware of the registration threshold. As a small business owner, when your sales reach 25,000 per year equivalent, that means if you are selling sales from January to December, if your sales surpass 25,000, you are now required or obligated to register for VAT. So this is equivalent whether you are selling in ZIG or USD, you track it as 25,000. So that's the threshold for VAT. Then pay as you earn. Pay as you earn, as we said, it's a tax that is withheld by employers on behalf of the government. So it's based on tax brackets, which are issued for both currencies, for ZIG and US every year. So for USD they don't usually change, but for ZIG they change as the exchange rate changes. So it's your responsibility as an employer that you correctly implement pay and ensure compliance with labor laws and avoid penalties. So you need to also to explain to your employees how this will affect their take-home pay and what are their tax obligations. Now with the new system that Zimra is using, which is called terms, every employee now is required to have what we call a TIN, a tax identification number. Every adult, as we said, Zimbabwe is digitalizing most of its ministries, and part of it is having the term system, which is linked also to the registry. It's linked to the registry. The registry is where your IDs are issued. So when you get employed and if you are employed and you pay payee, that means your TIN is linked to your ID. Your TIN is now linked to ID, so that wherever you go, your ID or your TIN can be used simultaneously. So that's for payee. Then we have another tax which is for informal traders, which is called a presumptive tax. A presumptive tax, if you are an informal trader, you don't keep books, right? And sometimes you need a tax clearance. When you go to Zimra or when you go on the website of Zimra and apply for to get a tax clearance, and if you say like you run a salon or you are a transport operator, they'll put you in categories where you just pay a fixed amount of tax, whether you make profits or not. So presumptive tax is mainly for informal traders, which they say is simplified tax system, but on your side it's not a simplified tax system, as you usually you get charged more tax than the profits you are making. So these are the four main tax heads that we have, or you need to understand as a business owner. Then also lastly we have another tax which is called capital gains tax. So this tax will dive deeper much into our training, which we do for the tax basics for entrepreneurs. So it's another tax head that is there, that is automatically registered for you when you register for tax in terms. So what is automatically registered? What's automatically registered is income tax and capital gains tax. So we move on to why proper tax management matters. So as we said, it avoids penalties. It also helps you in planning your cash flows, and also as you are now tracking your sales, your expenses, you find ways of how you can maximize profits. So by leveraging available deductions as well. So let's now get into our main topic. So what are the 5 common tax mistakes and how to avoid them? First of all, let's move on to our text. Mistake number 1, poor record keeping. Most entrepreneurs face this problem of poor record keeping. So when you are doing you are recording poorly in your business, you will find that it will be very difficult to calculate your tax, which might lead to incorrect tax calculations, right? It might lead to inaccurate tax calculations, which will result in discrepancies or penalties. Then also, you risk being audited by Zimra. When they visit you, especially last year, Last year Zimra and previous year 2023 they were doing what they were calling voluntary disclosures, because they wanted to move from the e-taxes to now the term system. In terms, it's more of a transparent system than the previous system that they had. So when they visit you now, because there's now terms, and you have these discrepancies that are not in line, you might risk being audited, or you sometimes you'd have done things correctly, but because of poor record keeping, you don't remember which receipt or which rate you are using in 2024, and you are saying you had sales of 75,000 ZWL dollars. So poor record keeping also risk you with being audited. Also, for you to be organized as a business organization, you just need to, if you are not if you are recording poorly your finances, and it will be very difficult to establish organization or being organized. So what is the issue that comes with poor record keeping? Compliance issues. By failing to maintain proper records, it will result in significant compliance challenges. Let's say now that there's a income tax or QPD that is due on the 25th next week, 25th of March. How is it calculated? It's calculated based on a provision. You don't know how. Most business owners know their sales, but their expenses, that's where the challenge is. And as we said, that QPD is for income tax. For income tax, it's calculated based on profits. How much are you making as profit in your business? Sales is not profit. Revenue is not profit. Your profit, they are determined by the sales minus the cost of sales minus the operating expenses. So for you to post this QPD, you need all those details. So poor record keeping will help you issues of compliance. Then also tax reporting accuracy. It will be very difficult to report that something is accurate when you are recording poorly. And also it will be very difficult for you also to have a system of transaction documentation. How do you keep your receipts? How do you keep your sales? It will be very difficult, or it will become an issue with poor record keeping. So as we said, it will lead to incorrect tax calculations. It might lead to penalties and fines. As we said, also it might lead to audits and other consequences, which are time consuming and can incur additional costs. What is the solution here? You need to have a streamlined record keeping. Streamlined record. So when we are saying streamlined, you need to have an organization of how you record your sales, right? In a separate book or a separate system. Like this, we might call it a ledger. Then your cost of sales, your COGS. Let's say you are buying things for resale. You need to separate COGS from sales, and COGS, cost of goods sold, the purchases that you are doing, from other operating expenses. Then also you have a ledger for other operational expenses. They peg presumptive tax higher than profits for informal traders. The reason they peg presumptive tax higher than other taxes is because they want to encourage you to comply. They want to encourage you to be organized. So when you are organized, sometimes you see that you are either making more profits or you are making losses. So most of the time with presumptive taxes, they are on the bedside of the business owner. It's very difficult to pay those taxes. So it's they peg them higher so that it's sort of an encouragement of how that you need to be registered with Zimra with having a company and also registering with Zimra, then also being required to keep these documents, your transactions, your financial statements, so that they can prove as well what you are making, and also you can also see what you are paying for. So that's the reason why they peg preservative tax higher. Are you answered, Farida, Albert? So we move on now. I believe you are answered. All right. So as I was saying, I like Google Sheets. Everyone has a Google account here. You can go on your Google and search Google Sheets. It's more like an Excel file, but this one you can have it on the go as always. You can have it on your phone. You can have it anywhere. And I understand that Zimbabwe is a cash economy. Most of the businesses are doing update. Was it cash out of 60? The balance will automatically update. You can set this up simply in Google Sheets. And the good part is that you can have it on your phone, you can share with someone, or you can have someone edit it. And now there's no need to be sent to always request reports. You can see each transactions in real time as they are happening. So it's very important that you streamline your recording by using these tools. It's a free tool. It's a very free tool which you can use for free as long as you have data and a Google account in a phone or a laptop. So you need to explore Google Sheets for recording purposes. Then also you can, with the world we are living now, there are now various digital software that you can use. One, accounting systems are good for control measure, as a control measure for your business, for your resources. They reduce pilferage in your business, or they reduce theft in your business by just implementing or having a software which you can audit, which you can check how much stock is left in this branch, how much stock is left, were the reconciliation done. So you can check softwares like Zoho Books, which is a bit cheaper, or QuickBooks. I prefer Zoho Books as it is a bit more scalable than QuickBooks. QuickBooks is meant only for medium-sized companies, but with Zoho, as you grow, it has other modules that you can add up to, just like Sage or 365 Dynamics, or there are so many systems that are now out there that you can explore, but you can explore those two and how you can use them. Then we have talked about user-friendly tools like Google Sheets or Excel. Excel is a versatile tool and a tool that you need to learn and understand as a business owner, as it simplifies how you can calculate your maths, because winning and making profit in business is about math, and you calculate your maths in Excel and Google Sheets. So we need to use tools that are user friendly. Then I would also want you to check another tool from Google, that is Google Keep. This is for your note taking. It's a very convenient tool that you can use for note taking. So are we all moving along together? Yes, it will be recorded and it will be on this channel. It will be recorded and it will be on this channel, so you can come and view it anytime once the stream has ended. So what percentage of tax is used? So tax depends with your sector. If you are an operator, a transport operator, there's a different amount. There is no tax rate. So on presumptive tax, it depends with the sector that you have been allocated with. So if you are an accountant, for example, you have to pay, I think if I'm not mistaken, is about but it's paid now, it's being paid monthly or quarterly. It's now being paid quarterly. When you are a lawyer, it depends, but the amounts, they are quite hefty amounts if you are practicing alone. So you check with the Zimra website about presumptive tax in the sector that you are. There are different amounts, so they are not tax rates, but they put amounts. Let's say 1,000 for transport operators, combi operators. They also put amount. They don't put tax rates. Tax rates are only used for varying amounts, because when you are making a profit, not everyone will make profits like Econet or profits like another company or so they put a rate which is based on your profit. Let's say 25%, which is different from uh, from tax rates. So let's move on now. Let's all move on now. So as we said, you need to implement record keeping systems like Excel, Google Sheets, accounting software like QuickBooks and Books. That's mistake number one. Mistake number one, we said poor record keeping. It's a text mistake here. And it will make your business difficult to scale because you are recording poorly. It's not only on the tech side, it's also on your side of making profits as a business. So you need to be recording to streamline your recording, your record keeping. All right. Mistake number 2: mixing personal and business finance. This one is a great one. Most people, especially in Zimbabwe, with the fact that we are a cash economy, we might want to open a bank account, but the trust for banks or the financial system in Zimbabwe isn't well treated people well. So most people they keep their cash, but as a business owner, you know how not to mix personal and business finance. Google Sheets, it's a very good tool if you want to separate your personal and business finance. You set up that spreadsheet for January, right? January, or we are in March, for March, which runs all your transactions for the month, right? With a running balance here. So whenever you have sales or your cash sales are cashed in, they are recorded here as cash in, right? You've sold 100, and it will have a running balance automatically of 100. When you take 60 for fuel, it will automatically update. This will enable you to separate your personal finance. If you want your personal finance, you can take 20 here. Then it will say you are left with the 20. That's running every cash balance that is running. You can easily calculate, separate starting from cash, because cash, that's where most of the things that where difficulties may arise. So this mistake comes with complicated errors and mistakes. When you mix personal and business, it will be very difficult to see which expenses are for business and which ones are not for business. So it will bring difficulties during tax season. So sometimes you see your consultant or your accountant now putting new returns. And to be honest, this year, if you have been putting new returns, don't put new returns if you are going to request for the tax clearance, because terms now doesn't give full year tax clearance for those people who are posting new returns. And when you are posting new returns, and when you now want a tax clearance, they would want a post clearance audit. They would want to do an audit on you, because now they have your ID, which is linked to your bank account, TIN, which is linked to your ID. They can easily track you. And some people have been in that situation, especially in January, where whom were putting new returns. So don't be in the habit of putting new returns or just requesting for a tax clearance, because it will put you in a tight corner and you might get penalties and get charged for you are saying in Zimbabwe it's very difficult to separate personal and business finance. It's not hard. Go and try and practice this Google about. You see that it's very achievable to separate. Very achievable to separate personal and business finance. But as I said, it's a cash economy. You need to have that Google Sheets, and also if you have employees or someone who handles your treasury side, you need to have that person that records your transactions, and you can easily audit them on. This will create a separate personal and business finance. So it's very achievable and very doable in Zimbabwe. All right. So when you are mixing your personal and business finance, you lack financial clarity. So it will be very difficult to know if your business is performing well or not. And it will be very difficult to claim deductions. So tax is not always about being taxed and taxed. There are legal ways that you can reduce your tax legally when you know them and you apply them. But if you are mixing, it's very difficult to claim those deductions. So you will end up having inaccurate tax returns or sometimes new returns, right? As most people post this. Then also you might overpay because you are not claiming the deductions, right? So from inaccurate tax deductions, they might lead you to overpayment of taxes, which will affect your cash flow. Then also, most likely, the last one, incorrect deductions can lead to penalties, which will cause a financial burden on your business. All right. This Econet network is acting up, but yes, I can send you. You can message me on my WhatsApp, and I'll send you on WhatsApp on email if you want the slides. For those who would want the slides, you can message me on WhatsApp, on my business WhatsApp. Then I can send you the slides via email. What's the name of the Google Sheets? For those who would want a snapshot of the Google Sheet I'm talking about, you can message me after the session, because at the moment I can't directly share it with the screen I'm sharing. Today's network is a bit hazy, but we'll try to finish this so that the recording will be live when we finish the webinar. All right. So, as I said, you open a dedicated business bank account. Yeah, you can do that for if you want to receive payments, not through payments. But as I was saying, you can open a Google Sheets account. I call it a Google Sheets account because it's helping a lot of entrepreneurs. For those that I have implemented it for them, it has been working wonders for them. It separates your personal and business finances. So it's so important that you create this Google Sheet. So when you do that, you have a clear expense tracking. Having separate accounts, it will have you clear expense tracking. Then also, it's now able for your accountant to generate accurate tax returns because you have the source documents. Because bank statements are like source documents which can be used by professionals, accountants to prepare tax returns for your business. So it's important that you create or you banking for your small business. Then also you can have now compliance and financial clarity by having a separate proper record keeping and separating personal and business finance. You can now have financial clarity and it will be easier for you. Mistake number 2 we were talking about. Mistake number 2. So we move on to mistake number 3, ignoring tax deadlines. This is another one, ignoring on income tax. Where it doesn't automatically register for you is payee, VAT, withholding tax, and what other tax that's there? IMTT is automatically, you are registered automatically, and the bank is takes you on your behalf. So that's the main taxes. So these taxes have different time deadlines or due dates. Pay is paid on the 10th of every month. VAT, previously it was 25th, but it has changed now to the 15th since February. Withholding tax, same 15th. IMTT, this is for companies that withhold payments which are done through internet banking, then they do them later on a quarterly basis. So what happens on income tax? So we are in 2024-2025, right? So when you are a small business, Zimmer assumes that your financial year is from January to December, right? And they are saying in 2025, so 25% of your $100 it will be $25, right? Or $100, $100 is your profit. When you have made $100, how are you going to pay it? Before the 25th of March, is it 25th of March or 30th? You need to pay 10% of your profit, right? So of that $100, which is 25% income tax rate, you need to pay $10 this month, this quarter. Then it increases to 25 to how income tax works. Then when the year ends, right? Now you are in 2026. Zimra will say, last year you did your profits, right? You did your estimation of $100. The year is ended. How much did you make in actual numbers? Maybe you say you made, instead of you had estimated $100, but you made 125. Can you pay now the difference, the $25? You pay it before the 30th of April. So you would do another return, which is a reconciliation of the estimates that you did, now confirming that the actual numbers that I did in 2025 are this before the 30th of April. So that's how income tax is calculated. So for income tax, is for mistake number 3 is ignoring tax deadlines. So just so you know, Mutuli last year approved that when you don't file your tax return on time, it will charge $30 a day. And because now terms can, it doesn't need human interference, it just processes itself that you didn't do a return, and it will automatically charge 30 days, $30. I've seen that it's now it's still putting zig, but they had said it's $30 a day for USD payments. So you need to be aware of this. Alright, in which category do crafters fall? Making handmade products. So I don't have the full information right now for on presumptive tax, but when you are a registered company, all companies fall under one tax bracket. So when you're a company, you adhere to everything that is needed to be adhered to under a company. For example, income tax. If you have employees, you need to adhere to payee as well. Then if you are VAT registered, you need to adhere also to VAT. So on presumptive tax, it depends now with your industry. So we were saying $30 a day. So let's ignoring tax deadlines. So it's the issue here is you are filing late, filing returns late, and you are doing payments late. This will result in payments as well as interest. So you need to make timely filings and also need to monitor interest accumulation. So it will increase financial burden for your business as well as strain on your finances. So what is the solution here? Everyone has a phone. You go into your calendar, all right, and set up reminders. On the 10th, I have pay every month, so that when the 10th arrives, or before the 10th, maybe the 7th, it will give you a reminder that you need to, even if you have someone who is doing it for you, you need to have reminders and checking if they have done for you. Also, you can use tax professionals. They can help you easily so that you can avoid penalties. Are we all moving together? Are we all moving? I believe so. So now, before we move on to mistake number 4, I just want to give you this opportunity of this course that we are running on. We have a tax basics for Zimbabwean entrepreneurs. In this course, which is a 5-day course, which is based online, which we run for 5 days, which we offer of a 40% discount. Of a 40% discount for those that would want to attend the online session of the tax basics for entrepreneurs. So that means you have to pay $30 That means you would have saved $20, right? So for those that will be interested in utilizing this 40% discount, you can WhatsApp us code 40. You just say code 40, right? Then we'll give you the payment details. Please note that this offer only expires on the 25th of March. So that means you need to have paid up by the 25th. Then also on the 29th and the 30th, we are hosting a live or physical session in Harare CBD, which will run for 4 hours a day. So it will happen on 29 March and 30 March, right? It will be a Saturday and Sunday. And because this is a live session, it's only limited to 5 slots. So if you would want to attend the live session, please WhatsApp me physical Harare. Then we organize for the payment. This one doesn't have a discount. It's running for $50 only for physical masterclass. So the physical masterclass is going for $50. There are no discount. But the online one, if you'd want to attend the online version, which will run from 1 April to 5 April, you can message us code 40 to utilize the 40% discount offer. So on this, we just want to talk about the outline of the course. On this course, the tax basics, what will you learn in this course? So we just want to highlight what you will learn in this course. So what you learn in this course, first of all, we have an overview of Zimra taxes, then NASA, NEC, and other regulations. So we need you to, if you want to attend, you need to understand what you learn in this course. Then also we'll talk about the types of taxes that you need to adhere to as a business owner, and or that you need to know, and the levels and the states in which you need to register them. Then also we'll do the business structures and their taxes. Business structures. So each business, how you register your business, has an effect on the tax obligations that you enjoy. Then also we have the practical tax registration, right? And compliance, where we will learn how you can register for tax, how you can register on terms, how you do it, and how do you stay compliant, and how do you prepare returns for your business. All right, so then we'll do everything practical now. So on practical, we'll use Excel spreadsheets. You will learn Excel spreadsheets, the essentials of how you can use Excel to calculate your VAT, your payroll, your income tax and other tricks of Excel. So this part is more like you are learning Excel for entrepreneurs. What else would you get here? You get templates for your VAT, for your payroll, for your income tax calculation. Then we have other discussions of how any challenges you are facing, you will be answered in this session. So you can if you'd want to attend to this session for online session, use code 40 if you'd want to have a special discount of 40%. And if you want to attend the physical master classes in Harare, please just message me physical Harare. Then we send you the details. So mistake number 4, we are about to finish our text mistake. Misclassifying employees and independent service providers. Do we have employees or service providers? Sometimes you are still small yet you don't have some employees, but sometimes you have employees but you are classifying them as not having employees. So this is so important that if you misclassify, it has consequences. So it can result in severe penalties and implications for your business. So what is the issue here? It is an issue on your tax compliance risk. It increases your tax compliance risk because in business you need to manage risk, and by increasing your risk you are putting yourself on the negative side of things. You just need to know how things to stay good on the good side of things, of how things are done. So you might result in unpaid taxes, triggering audits and other fines. Then also you might face legal repercussions with employees as well, which might lead to lawsuits from misclassified workers. So you have legal risk, you have financial consequences, and you have credibility damage, especially if you had grown to a house. Then there is an issue with of labor laws. It will damage your business credibility. So what is the solution here? You need to understand the difference between an employee and a contractor or an independent service provider. Then also you need to understand why it is so important for you to comply on these ones. So on solution, you need to learn, you need to educate yourself as a business owner on the differences between an employee and an independent service provider so that you keep your business safe. Mistake number 5, failing to take advantage of tax deductions. As we said, you can save a lot when you are knowledgeable of how you can legally save on tax by taking advantage of tax deductions. So most business owners, they think tax is a headache to them. Tax is inevitable. As you grow, your taxes will also grow, and you need to start early by educating yourself how you can handle taxes, because nothing is as certain as taxes. It will come to you. So you need to start looking into this tax compliance. So most business owners overlook deductions, not just small business owners, but even big medium-sized companies. Sometimes they overlook on deductions. So you need to not make that mistake of not taking advantage of tax deductions. Then most business owners don't understand deductions. They don't have a clear understanding of what are allowable deductions and why they are crucial to your business, so that you can optimize your tax liabilities and improve cash flow. And also, they don't know how to maximize tax efficiency. So, what is the issue here? If you do not claim your allowable deductions, you risk your tax liability risk increase, because you now have a bigger tax liability. For example, you are VAT registered, right? And sometimes you are buying from VAT registered suppliers, but you are not keeping those receipts. And as you are not keeping those receipts, you are not claiming your input VAT. That means you are paying more tax, which you are not supposed to be paying, right? So this is the disadvantage of not paying, of not looking into allowable deductions or taking advantage of tax deductions. It will also lead to financial health implications, because now it has become a cost times 2. So failure to use available deductions can adversely affect your business overall financial health and cash flow. So what is the impact? You end up paying more tax than necessary. You pay more tax because you are paying double by not taking advantage of tax deductions. So, and it will reduce your financial resources. Then also profitability. You are in business to make profit, and if you're not profitable, it will not make sense to you to continue doing the business. So not taking advantage of these deductions is also a disadvantage for you. So how do you you need to identify allowable deductions like rent for your income tax, salaries, utilities, business travel expenses. So that's the importance of having a structure or a record keeping structure where you can claim these, right, easily, and it reduces your tax liability. So this is the end of our session. So in conclusion, we have common mistakes. There are so many mistakes that can be made in regards to tax, but also we have just highlighted how you can solve them. First of all, if you are failing to separate personal and business finance, go in Google Sheets and create a worksheet or a workbook where you record your transactions for your business, especially cash transactions. For those that would want to help to set up this Google Sheet, you can message me on my number, my business WhatsApp business number. Let me write it here, especially for in the group. So you can get me on this number, only WhatsApp. It's Aligned Academy. So if you'd want help to set up a Google Sheet, a simple Google Sheet for your separation of your personal finance and business finance, you can message me on WhatsApp on this number. It's +263. Alright. So thank you very much for attending this session. We have come to an end of this session. And if you have found this session helpful and you have gained a lot from this session, can you please subscribe and give a like so that it boosts the channel so that others can see this valuable information. Thank you very much. The session will end now.